And then he caught a falling knife. Yeah, this shit does look crazy. I'm using someone else's laptop, so I'm trying to. I don't know where I'm at. Um, it's called. Damn, I need to log into mine. Oh, it's on here. Where? What? Okay, I'm about to share my screen. All right, so share screen, entire screen. Okay, okay. All right, so where do I want to start? We're going to look at Bitcoin. So the reason why we're going to look at Bitcoin is what's that bar? I'm going to show y'all. I gotta move this down. So Bitcoin, the reason why I always say that Bitcoin is the lead driver, basically. It tell us where we could be headed before we even head that way. So 4 days ago, I posted this. Bitcoin isn't just crypto anymore. It's the most honest risk asset in the world because it trades 24/7 with no breaks and no protection. When money wants out, Bitcoin shows it first. Stocks follow later. Right now, Bitcoin isn't just pulling back, it's losing structure because buyers are stepping away. The most important level is 89,922. That level was real support. Big money defended it before. Once Bitcoin lost it, the market changed, and we're seeing that now. If price stays below that and we claim it, that means buyers are gone and sellers are in control. So buyers are gone and sellers are in control. When support turns into resistance, price doesn't just move sideways, it drops into empty spaces. That's what you're seeing. Um, the drop that we're experiencing right now is is just it's just a tease. We haven't got the flushes that we're supposed to get yet, but I know what it's doing. I'm gonna show you what the candles are doing. Um, so when support turns into resistance, price doesn't just move sideways, it drops into empty spaces, meaning where there's no liquidity. So where so we'll drop into spots that we haven't touched in months or years. So Bitcoin touched a spot where it hasn't touched since 2022. So you're going to start seeing the market touch spots that it hasn't touched in like a year. Um, so that's why the next real downside levels are 69,800 and possibly 59,290, but we're going further down than that. Those are places where buyers actually show up in the past. I try to be as blunt as possible, but sometimes I don't give the like every level that I believe that we could touch just so people aren't scared, but I do in a way where you should be aware though. And if you ignore it, then your account gonna suffer. Now, at the ETF situation, for the first time ever, Bitcoin ETFs have seen 3 straight months of money leaving that matters because ETFs were the automatic buyer. As long as the money was coming in, dips got saved. Now that bid is gone. There's no one there to buy the dips. There's nobody forced to buy. So let me. So this is the chart, and you can see never in history have Bitcoin had three back-to-back months like we're having now. Uh, Let me click on it. So these are the three back-to-back months: November, December, January. We had 2 months, but we never had three. It won't let me open it up for some reason. But if you've seen that post, you'll be able to open it up. I don't know why it's not letting me. Um, so where we at? So now support levels actually matter again. Before it was resistance. You need to put your fib retracement on there because you don't know where we're headed, but you know we're probably headed to all-time highs or past that. It's the opposite way now. So now you're about to really see if you're able, peace, Renee. Now you're about to really be able to see if you're able to trade. Um, but the market that we just was in, you didn't need to know how to trade. It was like a bull run, but not like not the normal bull markets where you just rip like we did in 2024. We just had like we just rip 2025. It was a little more testing. This year is going to be even more advanced than last year. And last year still had a lot of people like discouraged until like the end of the year maybe, and then it took away that confidence again. This year is going to be, it's not even going to let you build confidence basically. Watch the part. Okay. You said question. Stay clear. I'm not sure if she was talking to me, probably not. Unmute yourself if you was talking to me, but it's raspy. um So now the support levels actually matter again, and when they break, price moves faster and further than people can expect. This is why the market follows Bitcoin. When Bitcoin breaks down, risk appetite disappears, funds reduced, exposure, volatility spreads, stocks don't crash immediately, but they start to feel it. That's what you're seeing now. The real trigger isn't just breaking 89,922. The trigger is failing to get back above it. If Bitcoin tries to bounce and gets rejected there, that confirms the pullback phase has started. So the pullback phase has started. Um, this isn't fear, this is structure, this is liquidity. This is what happens when buyers step away. If Bitcoin can't reclaim 89,922, the doors opens. And once that door opens, the move down is no longer a surprise. It's the path of least resistance. So now we go to our chart. We'll pull up Bitcoin. So now Bitcoin's getting smoked. So we didn't just test my support, we ripped through my support. That's letting me know that this isn't just a regular drop where you go down and then bounce back up. This is letting you know buyers aren't here at all. So right now we're supposed to hold this level, the 69,800. That's the level I've had for years now. Um, since I first started trading Bitcoin. So level, that level, we haven't touched that level since 2000, so 2 years ago. Um, this level right here, it gets nasty once, well, we're under it now, but now it gets nasty. We had to come back. So this right here, we was bouncing back up to retest this area, but I'm trying to show you what happens when we fell. Now, so what happens when we fell this level? History doesn't repeat itself, but it often rhymes, they say. So we'll come back to where we was in 2021. So as long as we hold this 60,000 level, we'll range from 60,000 to 70,000. Um, but the longer you just range, the more liquidity could just be building, and then once it's snatched, it's gonna get nasty. So this is the level that right now the market's already gonna get hurt because we broke below this level. We break below my 59,284 level, we'll start to see SPY where I want to give you like levels that you see gonna hit. What my shit at? Oh, okay. Once we break this green level, we'll start to see SPY back at that 620, 630 level. It's gonna get crazy. And then you don't want to lose this. Um Once we drop that 59,284, you even slice through the moving averages. And what you got to know now, we have moving averages here to at least um, prolong the drop to like hold it out. We had the moving averages that stop the drop and bounce a little bit, then go up and then drop through, but it's still sliced down. It's still sliced down. So we had a lot of bounces, but now we're below all our moving averages. So the drops is going to just be nasty and empty. Um, so I could see, let me this I could see Bitcoin. I had put the levels, but I could see Bitcoin coming down and testing this 35,000 level, which would be that will hurt the market. Uh, and that's the level that I'm starting to think that we can hit that level. Um it matches my 20% drawdown. Bitcoin is only down 20%, 21. Well, now it's down about 23, 24%. Regular market for Bitcoin, you're normally experiencing drawdowns of 80,000. So I'm gonna show you though. This right here was a beautiful bear flag. You can see the pole right here. It's the pole. You can see the flag here, and then once it broke down, it dropped. That was a huge. That was the bear flag that I've been watching set up for probably like 2 months on Bitcoin. People kept thinking it was going back to 100K, but it was just consolidating, building liquidity to get ready for the drop. And now that we have that drop, we go to the weekly C. We got the 200-day moving average right here. And it's no coincidence that that's right there at my support level. That's just confirming that this is the next spot where we could potentially have buyers. So we'll come down here for sure. Uh, Bitcoin will be under 60,000 next week, and then we'll probably consolidate between these two ranges. right here, the 70 to 60, like I said, until this right here, the 200, we already could take that out. It's weak. We're definitely gonna fall below 60K on Bitcoin for sure. I see Bitcoin now. Let me just give a level where I feel confident Bitcoin's going. If we break this 60K, I feel confident Bitcoin goes to 35K. Yeah. And that's going to be nasty because remember the market is following the money. Bitcoin has the money. Um, so I even gave, we're not only going to talk about Bitcoin, just starting off with Bitcoin, because this is going to tell us where the market could potentially head, where the market potentially at. So we already took out our first level, 69,800. Just going to retest the level. We'll get a bounce, a relief bounce to retest it. Um, I've been saying that this isn't QE. This isn't um, QE. This is RMPS. It's never a good thing when you see the feds having to come in and inject money into the market. Then you see the government shut down. We don't have the money, the funds. Um, they're not. It was, and I even said that it was. Where's my? I think it was this one. Starting today on December 12th, the Fed will begin buying 40 billion in short-term bonds each month, and they will do this until April 2026. They're trying to prevent a banking crisis. This is reserve management purchases, not QE. Um, so I had put so just last week we got our first bank failure. So this is the reason why the Feds was coming dumping money in the market. They was trying to prevent this from happening. It wasn't to because the market was just so good. When you see stuff like that, it's a warning sign for sure. So the failure is the first of 2026 and is estimated to cost the FDIC 19.7 million. Um, Metropolitan, whatever, reported 43 million in liabilities against advances from the Federal Home Loan Bank System in the third quarter of 2025. So this was our first crash right here, just letting us know that we're not headed um, in the way we want to be headed. We got to stop going against the facts, basically. Hold on, let me talk about my dog out. So 3 days ago, I said it gets nasty now. The highs I see Bitcoin going over the next few months is 87K. We're more likely under resistance now at 89. We'll put 80K and the next level was here, but we hit that level. Um, 3 days ago, I said I'm expecting 20% drawdown from now until summer for the market. I've been laying out scenarios on my view of the market in the last 3 months, been setting up for the bear market. I believe we kick it off now. It won't be a nasty crash, and we will see a lot of bounces. That's what we're seeing right now. Have a blessed day. Do your homework. I could have swore I posted. I thought I posted on here. I thought I posted. Hold on, because I'm a data person. I don't like just talking what I think. Um, I know I posted. Well, I know I got it somewhere. Trying to show y'all. Okay, so Bitcoin bear markets have usually been around 80% or more from the high. 2011 to 2012, Bitcoin dropped about 93%. 2013 to 2015, Bitcoin dropped about 86%. 2017 to 2018, Bitcoin dropped about 84%. 2021 to 2022, Bitcoin dropped about 77%. 75 to 85% is what we can expect, and we only dropped 20 to 21%. So we have a long way down. So if this is hurting you, you need to do adjustments quickly because this is nothing right now. We're still experiencing bounces, and so you're gonna have days where you're like, damn, this shit is fucking me up. But then you might 2 days later you might have a day where like this isn't that bad. But soon we're gonna get to the point where it's just you start to question yourself, is the market for me? It's gonna get crazy. Um, this is what real liquidity tightening looks like. Per my articles, when you see metals getting smoked, Bitcoin dropping, equity selling, bonds not catching the bid, so we're not bouncing on the bonds like we're not buying the dip on bonds, and a dollar ripping, that's not something to brush off. That's liquidity leaving the system 5 days ago. So that was I give if you're not if you don't got your notification bells on, I would strongly advise you to put it on because 5 days ago we wasn't dropping like this, so you had time. I try to give people um what I've my view of the market. You don't have to believe me. You could take it or leave it alone. And but I just want you to do your research to see why I'm saying that. I'm not always going to be right, but if you could see if there's times that I'm saying something and it might make sense to you, and now you're seeing the same thing, that could prevent you from losing a lot of capital. But if what I'm saying goes against what you're saying, still don't brush it off. Still see if someone else that's like credible that makes sense. Not like a lot of YouTubers just they're gurus. But if you see someone else saying what I'm saying and stuff like that, it's something to pay attention to. Um, I don't want to say I'm right all the time, but I have a pretty good read on this market thing. So we got to start being more strategic and stop going all in. Um, Money is rotating out of risk and running to safety first. The S&P 500 isn't safety. Your QQQ isn't safety. Your tech damn sure isn't safety. The tech is the worst thing to be in right now. If you are all in on buying a hold for tech, I don't want to say it, but I feel bad for you. You're gonna get smoked. Um, and I'm not even talking options. I'm talking buy and hold. That's what the market's going to do. I don't want to sugarcoat nothing. So every time that I look at my phone and late at night, I'm seeing this isn't like right now. France CAC 40. So I keep seeing like every time I go to sleep, like Britain right now is down 1%, Germany down 0.63%. France down 0.38%. Every time, like in the middle of the night, I see my phone. It's not even America. It's another country getting smoked right now. And then I'm starting to study previous recessions, and they always show the same signs. So I would do homework on your financial crisis 2008, even your the COVID one. Uh, there's so many. The 1923. There's a lot of them, but I would definitely start doing the homework to see um what can happen. Um, the market is starting to price in the Fed isn't coming to rescue yet before the Fed even has to say it out loud. Because remember, the market is forward looking. Environments like this, when leverage gets pulled, nothing is safe. Everything gets sold. Gold, silver, platinum all dropped hard after the news that Kevin Warsh is expected to lead the Fed, which pushed the dollar higher and hurt non-yielding assets like gold. This isn't a time to be a show-off trying to catch the bottom. It's the time to respect positioning, stay patient, and understand a strong dollar regimen usually mean pressure on risk until something breaks or the policy narrative shifts. So this will continue to happen until the Feds um, go a different route from what they're going right now. They're really not even doing nothing. They're just sitting back. So one thing that Trump says that's correct is too late, Paul. The Feds always come too late, and when they come to save, it actually makes it worse for us, and it hurts us more. Um, and then another thing I was saying, last thing, metal. When you see a stock like Meta, how Meta like crashed like that, Meta won't move the same for a while. Even with the so when that bounce happened on earnings, I knew it was gonna fade. It won't move the same again after it got smoked how it got smoked because that's telling you money is leaving out. That's not just telling you that people are taking their profit off the table. When you see a drop like that, it's basically like a warning, like don't touch this stock, basically. So you seen that with metal. That nasty flush last week was your warning to not touch metals. That was money rotating out and going somewhere else. Uh, last thing, metals won't move the same. We've seen a transition now. Precious metals already led earlier, now signaling a transition. Leadership is shifting and metals won't move together going forward, meaning you won't see gold, silver, and platinum, everything just all ripping up at the same time. You might see one day gold ripping up and silver might be consolidating or something. Market will make you start to feel lost, really lock in and do your due diligence.